Something unusual is happening in the metals market right now. Not just gold, not just the headline, but silver, quietly, forcefully, and in a way that tells us something deeper about the world we are living in. As of Monday, 26th of January, silver has surged past levels most investors never expected to see this early. Gold is trading above $5,000 an ounce. Silver has crossed $100, briefly pushing even higher in Asian trading. And whenever this happens, the same questions come up. Is this a bubble? Is this a speculation? Or did we already miss the move? Tonight, I don't want to answer whether silver goes up tomorrow. Instead, I want to ask a better question. What is silver trying to tell us about stress in the global system? Hello and welcome back to Think Wealth 6789. I work a regular 9 to 5 here in Singapore and invest on the side, just like many of you. Let's break this down calmly, clearly, and logically. Let's ground this in facts before opinions. According to live market data and reporting this week, gold rose roughly 64% in 2025 and is already up more than 16% this year. Silver, on the other hand, climbed about 147% last year and is extending those gains again in January. But here's the key point. This rally is not driven by one thing. It's not just inflation. It's not just geopolitics. It's not just traders chasing momentum. What we are seeing is multiple pressures stacking at the same time, and silver sits right at the intersection. That's why this matters. And some of you may ask why silver is different from gold. Well, gold is simple. Gold reflects trust or the loss of it. Trust in money, trust in governments, and trust in stability. Silver, on the other hand, is more complicated. Silver reflects fear and demand at the same time. It's a financial hedge and a critical industrial input. When silver rises together with gold, it doesn't just signal fear, it signals strain. Strain in supply chains, strain in industry, and in physical availability. That dual role is what makes silver so volatile and so revealing. Here's something most price charts don't show you. The physical silver market is tight. Industry data cited by Reuters and Metals Focus shows the silver market has been in structural deficit for several consecutive years. Silver is used and often lost in solar panels, electronics, electrifications, and advanced manufacturing. Unlike gold, silver isn't always recycled efficiently. So, when investment demand rises at the same time as industrial demand, prices don't adjust gently, they jump. And this explains silver's personality. Silver usually lags behind gold. Then suddenly it explodes. It waits while stress builds. Then it reacts violently when pressure is released. That's why silver rallies often feel chaotic. What we are seeing now fits the historical pattern very closely. And another important layer is that the US dollar's role as the only safe haven is being challenged. Roughly 10 years ago, about 66% of global central bank reserves were held in dollars. Today, that figure is closer to 56%, roughly 10% drop. That shift doesn't happen overnight. As geopolitical tension rises and policy uncertainty grows, investors and central banks diversify. Gold benefits first, silver follows, often more aggressively. This is why silver's move now matter. And the same questions you may ask, is this speculation? Well, let's be honest. Yes, there is speculation in silver. And yes, retail flows have increased. And yes, prices can pull back sharply. But speculation alone does not create multi-year supply deficits. Speculation alone does not force industrial buyers to compete with investors. What we are seeing looks less like a bubble and more like a shift in how precious metals are used. Now, the practical question is what this means for you. When markets feel crazy, the worst instinct is to chase. Silver is volatile. Silver is emotional. Silver can punish overconfidence. For most investors, silver works best as a diversifier, a hedge, not a full portfolio bet. Risk controls matters more than entry timing. And over the next few weeks, three things matter most. First, Federal Reserve messaging. Second, geopolitical persistence, not the headlines. Third, physical market signals, not just chart. Silver doesn't need hype to move, it needs pressure, and right now the pressure is visible. Now, let me leave you with this. Gold tells us when people are afraid. Silver tells us when systems are strained. And when silver moves like this, it's not shouting, buy now. It's whispering, pay attention. Understanding that signal helps you read the world more clearly, even if you never buy a single ounce. If this breakdown helped you think more clearly about markets, do like this video and subscribe to Think Wealth 6789. Here I focus on calm thinking, not hype, so we can all make better long-term decisions. I'll see you in the next episode and thank you for watching. See ya! Bye!